That's started. Okay. So I'll hand you over to Tom in a moment. I'm just going to show his screen. And welcome to the room, everybody. So we've been away for a good few weeks. Tom, of course, was back last week. But we had a bit of a break, and here we are. So over to Tom Williams.
Right, thanks, Peter. Yeah, it's Tom Williams here. We're speaking to you from Worthing, as you know. That's our hometown, a nice little resort town on the south coast of England. And the sun is still shining, and everything seems okay. Now, sorry for the mix-up, but, you know, Gavin, I don't know whether you know, but when he arrives, like a tornado hitting the place, you know, he's pulling plugs and pulling this and moving that. And therefore, you know, and then for some reason or other, they said 5 o'clock. Well, traditionally, we always start off at 5:30 because Peter likes to trade in the afternoon. So that's the cause, but I'm sure you don't really worry. I don't worry what time I start. I start at 4, or it doesn't make any difference to me. But anyway, so I apologize for the confusion here, but it's Richard Bentnall that has control over this information you receive. We don't. So we pass the blame over to him, and although he's very good, no problem really. But anyway, now they can see my chart, can they, Peter? Anyway, it's nice to be back talking to you. It wasn't our idea not to say anything over August. It was Gavin, and for various reasons that I won't bother to reiterate at all. But, right, so we got a 15-minute chart up of the S&P 500 futures market at the moment there. Now, right, I would say that we've hit a climactic action, a buying climax. Very close. I'd be surprised if it isn't. I think if you read the newsletter that we put out last weekend, right, the market looked bullish to me. Several people were saying it's bearish, so I said to Rita, well, we better be careful here and don't say anything too much. But I believe that was a test or something. That's what I was basing my view on. And, of course, there was a trend line which was much higher, which is gone through actually now, either today or yesterday. But there is massive volume. And if you read the newsletter, we've said there that the top of the market will arrive at some time with very heavy volume on the upside, right? It'll probably be overbought, sorry, I keep getting those mixed up, overbought. That's above the top trend line. However, don't forget, if it's a real true bearish market now, right, it's not going to just plummet off. It'll drop off a little bit like it has, you can see on this 15-minute. But they now will want to distribute. And that means that they have to hold the market up, and they even may, they're very devious, the market. I think the market, it just has to behave that way, to be cunning and devious, and more or less go in the opposite direction that your gut feeling thinks it's going to go. Never go by your gut feeling. I always say don't trust anybody in the stock market, and you can't even trust yourself. And what I mean by that is because your mind is constantly open and alert. It can't help but absorb all the so-called news, and this is happening, that's happening, and all the rest of it. But what it happens is that you can't blame your mind. It can't help but form some sort of opinion on that information. And because the information is not accurate, right, a as far as we're concerned, then you form a gut feeling that is inevitably wrong, and that's what happens here. Funny enough, I was listening to TV the other day, and some newscaster said, "We're not lying to you, but we're not telling you the truth." Something along those lines, which I thought was quite amusing. But we all know, from a VSA point of view, markets don't like very high volume and up bars. Now, in this case, right, it's shot up and there was massive volume. Right, I'll move the cursor over. There it is, look. Massive volume, look, right on the top here. Right, it's come up with a sign. What's that say, Peter?
That says no result from effort.
No result from effort. Well, you know, you stick these labels on these things, but please study and read these dialog boxes, because the information is very, very helpful in there. But the main thing is, look, as far as we're concerned, you've seen an up move, right? You can see the massive volume, look here, and that is a sign of weakness. In other words, it's not an up thrust. It looks like an up thrust. It may smell like an up thrust. Everything might look like an up thrust. It's not. It's a sign of weakness. It's supply hitting the market. An up thrust may occur over here somewhere, and that's just before the bear move will start. But this is just a sign of weakness. It's been marked up. I don't know whether the news was anything. Was the news? Well, Rita would have to look it up. But I don't ever listen to the news. Well, I say that's not quite true, but I don't bother with the news. I mean, I was listening to Gavin. He's just left. He's gone to Singapore, and he was talking away here for 2 or 3 weeks. I can't remember now, but he mentioned something. He said, "Oh, the news came out and made the market go up." I said, "Wait, hang on, Gav." I said, "That's not true." I said, "What happened was the professional or smart money marked the market up on the news, right? And that's the thing we've got to understand. And certainly you need to be aware of that, and I'm sure you are by now, right? If you're a professional player and you have to unload, right, holdings that you bought lower levels, you have to on up bar, because there are no friends in the stock market. But anyway, this top here, look, certainly looks like a top, right? But it's Friday. I'd be very, very cagey about Friday. They will probably want to finish up looking vigorously bullish to get all the media over the weekend to come out with all sorts of weird stories about how marvelous the market is, encouraging people to go in so they can start unloading their holdings on every wave up. So don't be surprised if this market doesn't rally somewhere up here, but it's highly unlikely to go higher than this level here. Highly unlikely. Now, okay, it's fallen off a bit. Now, 50% retracements we used to use a lot. That, I know you can draw loads of retracements of various numbers, but the 50% always seemed to work very well. So, Peter, can you draw a 50% retracement between the low and the high?
Okay. Can you check that everybody can hear you?
Can everybody hear me?
Type in something. Just to make
Type in yes or Y or something. Rita's there monitoring the screen. Oh, good show.
Just that somebody said they couldn't, so that's why I asked.
Good show.
The current one.
The current one. That's a good answer. What one were you on? The current one.
Right, so the top. Okay.
The top.
Now
Now we've drawn a 50% retracement. Now it's a useful little tool.
Yeah, I think the current one is you, but it is expiring soon.
You need to say
You and it's yeah. It's
the contract we're on is you, and we think it's.
Here, let Rita tell you.
Who asked that question?
John.
Hello, John. It's Peter. Yeah, yeah. The current contract, as far as I know, is you, U2. But I don't know whether it's changing very, very soon. We're coming to a point in September, aren't we? So it does change to the next one. But I don't know the date of that change. If anyone in the room knows that, please type it in and I'll relay it.
Oh, this is okay.
So,
Oh, someone says it's changed to Z.
is it now Z? So David's saying it's now changed to Z.
Today.
Today. Ah, okay.
Oh, let's change it.
All right. So let's have a look. No, we're okay. We're okay. We're using the composite. What's it called? The continuous contract, which on eSignal has the symbol of hatch F. So we're okay with that. But if people are using the particular contract, it is EZ12 ESZ 12
not got sound still.
for the S&P futures. So thanks for highlighting that. I mean, as I say, we're okay on this chart because we're using the continuous contract from eSignal. There's still somebody here who can't hear us. So Rita's going to type a message to that person. Okay, back to Tom. Sorry about that interruption, but I think it's worth it, just to remind people that every quarter the contract does change.
Okay. Now, have we got a 50% retracement, Peter?
We have, yeah. I'm just going to modify it to get a darker line.
Okay. See.
See that there?
That black one.
Yeah.
Now, if you draw 50% retracement on these moves, right, they're very handy, shall we say, because you would expect some sort of support on or near that line, that retracement. Now, why? Obviously, it's something to do with human behavior, but it does seem to work. Now, okay, so we went down here, right? We moved down, and lo and behold, there is some sort of signal. What's that say, Pete?
That says potential stopping volume.
Right, so we've got right here potential stopping volume. It's not all that marvelous, look, right? But there is an increase in volume, look. It's just above the average line. Okay, but on that volume, right, the next bar was up. So there must have been some support there, which you would expect on the Fibonacci retracement. Now, you also know that although there's a huge sign of weakness up here, right, with massive volume, which will show you even more on the other time frames, they will now want to support the market, especially if it's a real bearish top, so they can distribute more on every wave up. Every time the market moves up, they'll want to start unloading their holdings. And that may show in varying degrees of no demands. It may show little tests as they try to support the market. It will show narrow spreads perhaps on high volume. But at the end of it all, they're very, very likely to do an upthrust, right? And if you see that, that means that the bear market is about to start. And you certainly don't be long when you see those upthrusts like that. Now, are there any questions about that particular chart?
Oh, yes, it's a question here. Yes, we'd like to read that, Rita, if you're near.
Hello. Yes, Richard made an observation about 5 minutes ago, typed into the box This stock will go up again though, as when it's been dropping after the upthrust, the volume is declining and the bar before the present one has buying in it, which is correct.
Very good. Who's that?
Richard.
Richard Scott.
Richard who?
Richard Scott.
Richard Scott, that was very good. Right, that's excellent. So you're well on the way to being able to analyse these charts. Now what we'll do, we'll have a look. This is a 15-minute, but we'll have a look at even a different time frame. The hour I tend to like to look at as well. It gives them a chance to do things. And there it is, bang. If that's not climactic action, I'll eat my hat.
Potential buying climax.
That's what it said, look. Right, okay, so potential buying climax. Do you want to read some of that? Can you see that?
Yeah.
Me. A high to ultra-high volume up bar closing in the middle shows supply overcoming demand and indicates professional selling. In order to sell, the professionals have to unload into a rising market by selling to the herd. If they sold on down bars, prices would fall too rapidly against them. This bar should be into new, fresh, high ground. And in the background there should be an up move behind you. Eventually the herd panic for fear of missing out on higher prices and they buy on the good news. The professional groups will then sell into this frenzy of buying. And in the future, the next bar should be down to confirm this indicator. Look to the next few bars for confirmation. You would expect to see up thrusts, no demand up bars, and further up bars on high volume closing in the middle to confirm the weakness. Remember, the professionals may have further sell orders to execute. This will require them to support the market in the short term. If you see low volume down bars or high volume down bars closing in the middle, the market is not yet ready to fall. High volume up bars on a wide spread closing up and through the old highs represent absorption volume and strength. Can you look at the 5 minutes as well?
Yeah, we will. We'll look at 5 minutes. I mean, that's the wonderful thing with computers, isn't it? I mean, look, that was written many, many years ago, and that rule was written many, many years ago, and it's still working, and it'll be working in 50 years' time and 100 years' time. And whenever you see that, you know that the market's hit weakness. And then, of course, it has to reveal by its action what next week, you know, what's going to happen. But you wouldn't, well, what we're describing is what normally happens. And they need to unload, which is quite reasonable, isn't it? After a huge up move like we've had, right? Start unloading holdings bought at lower levels. And to do that, they have to support the market. They certainly don't want to sell vigorously as the market to make the market collapse under them or anything like that. They have to walk gingerly and support the market. And then every wave up, every little bit of news they could grab hold of, they will. And then once they've distributed, right, then you would expect an upthrust. That's the final bell, shall we say. They mark it up, ram it up fast as they can, probably on some sort of news. The volume will probably be very low, triggers off thousands of stops, misleads many people, because not many people look at volume. It's surprising. The people I've spoken to, they don't even look at it. They don't even bother with it. So they're only looking at half the picture. I don't be quite honest, I don't realize why there's such a lack of knowledge of this around the world, to be quite honest. But anyway, there's an hour. Now, is there any questions about this chart?
Yes, there's one here.
Right, hang on.
David, I'm assuming you're actually talking about the bar that we're currently on that's still moving. If that's so, David says, yeah, that present bar is low volume. What does that mean? Well, we're only almost halfway through. We've got literally about 35 more minutes before that bar finishes. So wait till then. What the volume is. Always wait for the bar to finish, as Tom will often say. Yes.
You'll find that if you don't wait till the bar finishes, you've analyzed it, right, on a bar that hasn't finished. You've analyzed something and the painting hasn't finished. And really, these bars can change suddenly. The market is definitely devious. It's cunning. It's not there to help you, right? And therefore, you need to wait. But what we can do, somebody said they want to look at the 5 minute. Two people have asked for 5 minute. Right, here we go. I can do that. There?
It's not there.
It's not there. Peter needs to
Let me take over the...
Okay, Peter's going to get it up. I did have it before Gavin arrived. Poor old Gavin gets all the blame for everything. He's not here. He's in Singapore.
That's a 5 minute.
Right, so that's a 5 minute. Right, okay. So that's a 5 minute. And I've only got 20 bars.
You want more?
You want more?
No, not really. No, I don't. It's gone up there, look, but, it is going up on no demand, look. Whoever mentioned that, last gentleman, he was right. Look, it is going up on no demand. No question of that, look, which is what we expect. We expect that. There's the weakness on the 5 minute at the top, look.
Up thrust.
It's called that, well, now, this, as I say, it looks like an upthrust, smells like an upthrust, tastes like an upthrust, but it isn't. What it is, a sign of weakness. Upthrust, a true upthrust, which marks probably the end of the distribution phase. A true upthrust, you have to have weakness behind you. If you haven't got weakness behind you, you've got an up move, look. Right? Blue bars showing it's trending up. But that is what happens when they want to start unloading. And if you look at the daily chart, that is overbought. It's up over the top trend line, which we mentioned in the newsletter last week. Yes, I looked at that newsletter last week, and I actually typed in expect higher prices, but then we heard via Gavin that several, well, I won't mention names, predicted lower prices. So I said, well, let's play it cautiously here. We won't say it's going up, but I hope I already had it in. Rita had to remove the type. But anyway, don't. All you do is read the chart. But there's, look, up bar after an up move, right? And there's even a sign of weakness on the previous bar on this.
End of a rising market.
End of a rising market, look. They're not far off there, look. Okay, so please read all these.
Stephen wants to know, is that where you'd short it?
Oh, yeah, definitely.
Yes.
I mean, when you listen to Gavin talking, he says, oh, you've got to do this and do that and have the trend this and the trend that. I don't do that. And, of course, he's been influenced by traders in America. I know that. He talks to a lot of people, and a lot of people out there don't know, be quite honest, what you or we know. And but when you see these upthrusts like that, or huge volume on the upside, collapsing on the low, then you know that's the time to short these markets. And there it is, look. And don't forget, yeah, what's that? No demand.
No, beautiful no demand.
Okay, now you will always find in a weak market, right? So bang, it's weak. You shorted, bang, bang. Now you've got a blue up bar, but it's no demand. Look at the volume. Look, there is no professional interest in that up move at all. And it's even closed off the top, look. Narrow spread. If you can't see that as no demand, you better read the books again. I was trying to think of something better to say, but I won't. Right, so that's definitely no demand, look. So it falls down here, but you get some support here, look, coming in. 5-minute chart, right. But it is going up. The gentleman who mentioned it, he's right. It is going up on no demand, look. And that's why it's beginning to round over. But don't forget, they want to distribute. And they need to support the market. So don't think that if you see a green arrow and stopping volume or whatever, that, oh, this is bullish, you know. It's basically the whole thing is weak. And they will want to distribute. If this is a true top, they will distribute. And that means you'll see no demand up bars, you'll see up bars on narrow spreads with increased volume, and eventually they'll do that on every wave up to distribute the holdings that they bought lower down. And there's been a terrific bull move behind us. So they'll probably have a lot to unload there. And in the meantime, they've got to suck all the public, banks and whatnot all into the market. And then once they've done that, they'll have a huge upthrust, catch and stops, mislead as many people as possible, then allow the market to fall. And it falls because they're not supporting the market. We've seen how this simple trending system works in a bull market. We see how the bars are blue, even here, look. Right? Blue, blue. Ignore the level bars, black, blue, up. And the reason that is, once they want to start generating a move of some sort, they make sure the market's supported and the close is higher than the close of the previous bar. But as soon as it becomes bullish, they don't do that. And that's why persistently you get lower and lower prices. And you'll see in these bear markets why the bars are colored red and how important it is for you that if you get caught on the wrong side of the market, get out of the trade as fast as possible. And you've only got to look at those red down bars, and they do not allow any substantial up move to allow weak holders, that's somebody that bought at higher prices, right, and locked in the market, and if they sold now, they'd be losing some money. They know people don't like that, and that's why they persistently don't support the market. They not there to help you. And eventually, the way crowd behavior works, these weak holders will get shaken out. It's the way the herd behaves. And we're talking traditionally. It's always happened, been happening for hundreds of years. Any questions? Not at the moment. Right, so that's the first.
Gold.
Right.
Is there an end of a rising market in gold?
Well, hang on. What's this one?
That's Dow.
Now we just have a quick look at the Dow. Now look, if you can't see that, it's a sign of weakness. Right, this is the Dow Jones 1 hour chart. If you can't see that, I would suggest you pack your bags and go home. Sorry. Yeah. Well, I'm sorry about that. It looks like an upthrust. As I say, it smells like an upthrust, tastes like an upthrust, but it's not. It's supply overcoming demand. And you can tell that because look, it's been marked up. It's collapsed near on the low, very near the low on that massive volume. So it had to be selling, didn't it? You don't have to be a genius to understand that. right? So you would now, because it's Friday, you would expect to support the market and try to be as bullish as possible. So get all the bullish news appearing in newspapers and television people who do not understand volume readings.
Hello, yeah, I'm just trying to think what chart it was we were on before. David says, so 3 bars back at 1720 on this chart here now, this is the 5-minute S&P. Even though it was a strong move up, it is still very weak because of volume, question mark.
Quite right. No, we've noted that. Yes, it's going up. It's been supported, look, with the blue bars. But look at that volume falling off. Look. There's well, of course there's no demand because they know all this is back here. They're fully aware of this here, look. Fully aware. Of course they are. They know exactly what it is. And that's why it's going up on no demand. But they're devious, they're cunning. They want to support that market. They want to distribute it. The other alternative they could possibly have is if they have a gigantic shakeout somewhere, and then that will allow higher prices for a bit. That's what shakeouts do. But right now, as far as my analysis is concerned, I would think that, especially being a Friday, they want to support this market, try to make it look as strong as possible under the circumstances, right, and start distributing, which I would have thought they would do. Now wait, just let me look at the daily chart. That's it there, isn't it?
Yes, yeah.
Now there's a daily chart look at the future. And there's the trend line which was drawn, what, weeks ago, was it?
Quite a while ago.
Quite a while ago, right? And that's why it's important to draw trend lines. It's gapped up, well, not gapped up, it's gone up, it's over there, so we're overbought, right? The weakness is not quite so obvious at the moment here, but I would think on this daily chart, this volume will get quite high as the day progresses.
Oh, now, there's a request for a look at
Gold?
gold on the, we have to use the end of day.
Right, we'll have a look at gold.
While we're doing that, can I just answer a question? Hello, Ray is asking, is this event going to be uploaded to the VSA Club? All things going well, technically, yes. So, Peter, will you be doing that straight after today?
It might be a few hours because...
It might be a few hours.
It's possible the system's been changed.
The system has been changed.
And therefore it won't be straight away.
And therefore it won't be straight away, but he'll do his utmost to get it done this evening. And I think I did have a question from Eleni about last week's, and I explained that last week's webinar was recorded on Gavin's computer, so it's up to him to upload it. So if you want it, you need to contact Gavin H at tradeguider.com or Richard B at tradeguider.com. All right, so it's gold in a minute. Is it already?
Nearly.
It's continuous.
Continuous.
GC.
Oh, thank you, Reece. That's
Down.
very helpful.
That's the one. There's the mic, Tom.
Extraordinary.
That's...
Now, what was the question? Read the question.
Oh, no, the question was just, oh yeah, can Tom take a quick look at gold? Is there an end of a rising market?
20 bars, Pete.
Yeah.
I just need 20 bars so I can see it better. Well, not really, no. right, a quick glance, you see, once you learn to read these charts, you can look at it and come to a conclusion within a few seconds, to be quite honest. But if you're actually going to physically go in there and trade, then you need to spend a bit more time looking at it, because it's very, very easy to miss things. But no, that's not the end of a rising market. End of a rising market is you'll find it'll be gapped up, the spread will be narrow, look like something like that bar, it'll be up, gapped up, and the volume will be ultra high, very high. If you see that, that is definitely end of a rising market. Right now, all you can say is it's going up. It's certainly overbought because it's above the trend line. Do we have real-time gold?
I'm asking because Oleg is saying today is a very narrow spread up bar on high volume.
Oh, this is on the end of day, yes.
I just typed Oleg.
Well, of course, I don't trade gold. Gavin seems to like it, but as I said before, I don't trade it because...
Oh, it's true.
What's that?
That's the same as yesterday.
Oh no, that's yesterday.
So no, we don't have the live data, unfortunately.
We don't have the live data, but the volume is certainly getting to look high on that chart.
So the one we just looked at was a derivative, GLD.
A derivative, GLD, that is, where the volume is high. That certainly looks weak, doesn't it, with that volume? But just because you see that, it doesn't mean to say it's going to come off, because they may want to start distributing some of their contracts, which they probably will after that huge up move, look. And that, they support the market. They keep holding it up. And they can hold it up for weeks. In the meantime, you think, oh, well, that's all wrong. Look, that's not weakness. It's not falling. But you've got to picture the devious, the cunningness of their action. You have to have more losers than winners for these markets to be tradable as far as the smart money is concerned. If everybody's a winner, nothing would happen. It would just be probably a very slow moving average line floating up with inflation. It certainly wouldn't be much else. You have to have volatility. You have to have winners. You have to have losers. And don't forget, we track the traders that can throw 4,000 or 5,000 contracts into the arena, which they do. And these are the people that will alter the balance of supply and demand until another force comes in. That makes sense? But right now, I would not say that's the end of a rising market.
Tom,
yeah.
So so talking of that gold, the request is that we look at the bar from today on our newsletter, which we'll be doing on the weekend. So perhaps we'll pull that up, Tom, when we're doing the newsletter, to look at the gold from today's price action to see and what's going on.
Yeah, we'll look it up and put it in our newsletter. When are we doing it, Rita?
Well, it should be Sunday.
Sunday. We'll be doing a newsletter Sunday, so don't expect it to be up until Sunday evening. And we'll specifically look at gold and the S&P, of course. And I was thinking of perhaps looking at the British pound as well more, because there's a lot of interest in the currencies. And the currencies work. They all work the same way. They all work on supply and demand. But, of course, they've got their own characteristics, just like human beings, They all have a different way of doing things. But basically, principles are all the same.
Hello, yes, we'll stay on this chart because there's another question on it. But Richard, Tom doesn't have data for FTSE market. Philip Friston is the expert, and he knows all about the FTSE. And if you've got a question, you can ask him either on one of his webinars or on the forum. Okay, Richard says he'll catch him Tuesday. Good. On this chart, Tom, David asks, is the smart money selling here, and is the herd the ones that are buying on this gold?
It's a smart money selling. Right. Well, I've only got... Can you put a weekly chart up, Peter?
Yeah.
So we get some more overall picture of what's going on here. Now, that's it. That's gold, is it?
Mm-hmm. GLD, derivative.
Well, it certainly churned around at the bottom, didn't it, look? That'd be accumulating down here, and there'd be various testing going on. Right, so it's certainly gone up there, look. But, of course, the end of the week, when will that come up? Tomorrow, I suppose.
That's the final day.
Yeah, so it's not really, look at that, it's going up, isn't it? But we'll have to wait till this chart won't be updated, I suppose, until tomorrow Saturday. But we'll certainly have a look at that for you, gold. A lot of people are interested in it. I don't personally go head over heels for it because there's so many amateurs in there that you believe it or not, these professionally driven markets are far easier to read. If you look at wheat and corn, all these markets, they're easier. But gold and silver, there's so many small traders in there, and professionals are experts at trading that, knowing that. So, but occasionally you see something very positive with all these things.
Still on this chart, Tom, Lance asks, if we saw testing in a couple of days, would that now be bullish?
Oh, yeah. Well, definitely, Lance. If you see a test, right, now a test, which they often do on Mondays, because as you know, most of the traders like to go home with no holdings at all, right, and they mark it down. It's down on a narrow spread, probably closing in the middle, right, or even the high. That makes it stronger. And you see definitely that the volume is low. That is, the computer's colored it pink. It's less than the previous two bars, so it's definitely low volume. Then you would expect higher prices, definitely. And if you don't get higher prices, then it seriously shows a serious sign of weakness there, because they've tested the market and there was no response. But normally you would get a response to a test, definitely. So you should sort out tests, look at them, and if you see them, one of the strongest buy signals that we have on any of these charts is you see a market going up, right, and you see a red arrow appear. Now, funny enough, there's one there, look. A red arrow appear, right, and there's a test on the next bar. Now, look. There it is. And lo and behold, what did I say? If you see a down bar, narrow spread, closed middle or high, the volume is, well, it's not all that low, look, but it's low, lowish, right? That's a test. You would expect higher prices, and they test it because they've seen that sign of weakness although they don't have VSA running, the whatever brought that up, no demand look, right? They would have seen that, right? So they tested, and there's a test. There is a test look. If you could burn that into your mind, and that's a test in a rising market. They come in varying slight differences, yes, you know, but basically all you need to understand is a principle. There's a sign of weakness there, look, and that is definitely a test, look. And note that the high is not a great deal higher than the close of the previous bar. So you don't want these so-called top tails to them. This is a proper test, a bullish test. They mark it down. It closed up top quarter, right? And the volume is not exactly like that, but it's certainly not high. Look, it's low. And that's why it went up, look. Now, it's a beautiful example there of what I was saying, telling you what to look for before I actually saw it. Okay? Very, very positive.
So now we have another request for the currency pair. Let me just check here. The Australian dollar. So actually we've got the futures here for the Australian dollar. So that's the 1 hour chart. Let me just read that question here. Can you please? Okay, yeah, so first one, Aussie.
Right, the Aussie dollar. This is definitely tradable. I mean, you've got your high volume came in here, look. What time frames is, Peter?
This is it's 1 hour.
1 hour, right, okay. So there's your weakness. Okay, came in, right? But because the currency was fairly, it's probably here, is there? What's the volume on that? Is it low?
Lowish, but this is midnight.
Well, no, you don't read. Yeah, Gavin's, sorry, Peter just said it's midnight. It's fine, it's midnight, but don't forget professional traders, they never really sleep. And that's a test, look. Okay, it's what's happened is, right, you got this volume here come in, knocked it sideways, but that's a test, look. We can't see it very well because it's Globex. And that's why it's gone up like that. So it's all very well. You're reading all this stuff in like, oh, it's midnight and it's this. I would certainly try to avoid that if I were you. Just read the chart, believe what the chart's telling you, and you won't go too far wrong. If you start reading stuff into it like, oh, it's midnight or they've gone to lunch or all that stuff, it's going to confuse you. Yeah, but now look here, we looks like we've got an up thrust.
Weakness based on price, it says.
Yeah, well, that's, yeah, weakness based on price. It's interesting. We don't see that one too often. But that certainly looks like an up thrust, doesn't it? It's been marked up, look. Not terribly high, but it's been marked up, look. High enough to trigger off a load of stops, mislead a lot of people. That previous bar there was probably on no demand. Not all that clear because it's Globex. But up it goes, right? That looks weak, that market, and it looks like it's rounding over. And it looks weak because of this supply back here. These high volume up bars. Here, back here, sorry, here, look. There was a supply there. Now, if that wanted to be bullish, you could do a Fibonacci 50% retracement, Peter, from the low to the high.
Right.
Peter's going to draw a retracement.
While he's doing that, Tom,
Yeah.
Lance asks, would that be in the wrong place as the trend is up? I assume he's talking about
The up front.
Yeah.
Well, you've got weakness in the background. That's all an up thrust is telling you. you know, don't be swept away by too much of these trending things. Where's the retracement?
Right, just there. You see that one there?
Oh, that's a retracement, look.
Yeah.
Okay, now Peter's just drawn this retracement here. Now that Aussie dollar is quite liable to go here. And then when it reaches this level, right, then we'll can analyze it more. Now, if that's a real upthrust, which it certainly looks weak to me, and there's something here that doesn't look very strong either. And notice how it's slightly rounding over like a mushroom. If you see a blue bar somewhere along here, up on no demand, then that's confirming the weakness. Right? If it reaches this 50% retracement and you see green arrows appearing and one thing like that, then that's liable to go back on up.
And also, can we look at the euro? Don't know what time frame. I'll put the hourly on. I'm assuming this is euro. I'm not very familiar with. Is that right? Yeah. This is the hourly. If you want a different time frame, Louis, just say, and we'll put it up. Euro.
Well, I don't look at the euro very much. I spent some time looking at it, some years ago, and it was so difficult to read. I thought, well, why should I waste my time trying to figure that lot out? So, but they're charts that are easier to read. So what's the point of dwelling on one that's not all that easy to see? But it certainly looks like some weakness here, doesn't it? We've got some weakness here. It's been marked up. That black bar looks like a small upthrust. That also doesn't look very strong. And you've got this huge up move behind you. So it's not the sort of currency that you get all enthusiastic about going long on. But I looked at that, and of course, because it's so liquid and all. Mind, it was a few years ago I looked at it carefully, and it was bouncing around something unbelievable. So, like the Aussie dollar is far easier to follow, or the British pound, than the euro.
Okay. So, Peter, can we find silver? Sean would like us to look at silver. And while you're doing that, Lance said, you remember you were talking, Tom, about you might get a sign of weakness and straight afterwards there's a test or something. Yeah. Lance is asking, so no matter how serious the sign of weakness in the background, a successful test blows it out, ?
Yeah, we're talking about a market that appears to be bullish, going up, blue bars, and then suddenly a red arrow appears. Right. Now, the red arrow will not appear unless there's a reason that's been fed into the computer indicating weakness. It's usually perhaps no demand, or there may be an increase in volume, narrow spread or something, showing that there was some supply there, which happens. As these markets move up, professional players are also keen to take some profits like you are, and they often do, and it results in a hesitation and up move, and it might produce a red arrow. Now, if that red arrow is immediately tested the next bar, then that's a very bullish indication. Right, very bullish. I've seen that many, many times. And so look out for those tests. If it's especially the very next bar in a bull move after a red arrow, it's very powerful. Definitely.
Okay, Tom, this is the silver chart for Sean. Would you comment upon this? Silver.
Oh, it's up, is it?
Silver, yeah.
Right, oh, we got it up, good. Right, well, it looks very sort of similar to gold, doesn't it? It's following a trend line nicely, widespread up. Right, there's a slight increase in volume. it doesn't, it certainly wouldn't indicate the end of a rising market to me. It may hesitate, it may come back down, because these things do follow trend lines, look. May hesitate, may go up a little bit, Monday, Tuesday, float off, come back down to that level here. But it certainly doesn't look to me like the end of a rising market. Unlike the S&P and those. But don't forget it's Friday. They will do their best to support the market so it finishes up fairly healthy looking, so that all the stories can come out on the news, the radio, the TV, the papers, magazines, and they don't. You know more about the market than they do. And there they are saying, well, yeah, look, it must have been buying because on that fantastic volume, look, it went up. So what else would it be? That's the sort of stuff they come up with, but we know different. And if you get your head around reading these charts along the lines we're showing you, you will be head and shoulders above most other traders. And the more you do it, the better you'll get at it. And you'll have that knowledge with you for the rest of your life. And you will never, ever regret it. I can assure you that. And they're fascinating things to look at, these charts, when you more or less know what's going on.
Okay, well, there are a few questions left. We're about to sign off, but Eleni, hello Eleni, are you keen on lumber chart review? Well, we'll be as keen if we can. Lumber.
It's LB.
LB. This is the lumber, Tom.
What's this?
Eleni would
lumber,
like you to
yeah.
comment upon lumber. That's obviously the longer term.
Can you put 20 in?
20, all right.
Right, lumber. Sounds very exciting, doesn't it? Lumber. Wood, in other words. Okay, well that there, look, that's not healthy at all, look. And that's no demand, but look a bit. They popped it up, look. Narrow spread. Volume's low, is it, Rita? Yeah, let's have a look.
Eleni says, finished my shorts. I'm assuming that means it's going short.
What, on lumber?
Yeah.
So
What? It's a bit late going short, isn't it?
finished. She's done the short.
Oh, good show.
Excellent.
Oh, marvellous. That's marvellous. There must be weakness at the top here somewhere.
Oh, there's a no demand.
No demand. Next one. Sort of.
What, there?
Next one.
There?
Yeah.
Oh, yeah. Yeah.
But it's...
Now, the trouble with these commodities, they are dangerous because they've bring this law in of limit up, limit down business. Now, it sounds beautiful in theory. Well, you know, limit down so you can't fall more than this and that. But all that was designed for their benefit, not yours. And if you're not careful, you can be locked in the wrong side of the market. It could be disastrous. So be very, very cagey with commodities. As a matter of fact, the syndicate told me they never touched them. They were too dangerous even 40 years ago. But sometimes you see something very, very obvious. We showed you, or must have been a year ago now, feeder cattle. And it was a pretty obvious buy, and it shot up after that. Wait, I wouldn't touch commodities unless it was something very, very obvious principle that you could definitely trade on. But that was great. So there's some, the market's fallen, look. There's some strength coming in here. Down bar, narrow spreads, look. Now's the time I think they want to support that market a bit.
Okay, well, there's just two questions. Yes, we're going to sign off in a minute. Mark would like us just to flick over to the ES 5-minute, and while you're doing that, Tom, there's hang on, two kind of related questions. Sorry, I'm just going to switch this mute on my machine. It keeps on. Right. Yeah. While you got, there's two related questions, general ones that came up. One is, Tom, in your opinion, what are the charts that are easier to read? And another one, in your opinion, what is the best market for a trader new to using VSA? Best for trading, day trading. Yeah.
Well, the best chart for you is one that you can understand, and that may take a little bit of practice. But personally, I like to first of all look at the daily chart, and that very often gives you a very good clue what's going on. And sometimes, even in the daily charts, the principle is so obvious that you can actually trade on it. It doesn't come along all the time, but when it does come, it's very, very clear. Then I like to look at an hour chart to see more or less what's happened. If I'm seriously want to start trading it, I'll look at the 15-minute chart. That's personally the S&P 500. That's personally what I do. Rita likes to trade the Dow Jones Industrial. She specializes in waiting for up thrusts. And she's not really all that interested unless she sees one, and she gets enough to keep her happy. But that's what I do. But if you can't or understand a chart, don't touch it, because if it's not clear to you, if the principles are not clear to you, you should leave it alone, because it will become clear later on. See, like I said, I don't like the euro, but that's only because I looked at it and it seemed to be so complex, jumping around like a yo-yo, that I lost a bit of interest in that. Pick the ones that you can read. Currencies, the pound's quite good. The Australian dollar is good. So it's like any professional market. They tend to, well, they all do, they specialize in a certain area, and then they get to know its personality. They get to know how it behaves. It's like your own children at home. You get to know their personality. You get to know, you can more or less read what they're thinking. And that's why professionals stick to these markets. But that's what I would advise you to do. So stick to something that's easy, simple. Listen to the news on events by all means, but remember, they want you to listen to the news. That's why they give you all the dates, the times. Oh yes, it's coming out at 3 o'clock. That's 2:30. They love all that, because they know that if enough people are listening, then they can whipsaw the market on that news, and it makes some money, catches a load of stops, misleads lots and lots of traders, and so on and so on. So be fully aware of that. And remember that when you read and listen to the news on TV, you probably know, well, you do, far more than they do. And remember what we call the halo effect. And you see that on one money program on TV. They have a lady standing right in a busy part of the floor of the New York Stock Exchange, where all the telephones are, and she's there looking up at the camera that's based up on a veranda somewhere, hurling meaningless numbers at you. But the thing is, you think, oh no, they've got somebody on the floor. So that means that if anything happens, or it's going to happen, then that means that because she's a member of this TV team, I'll get to hear about it. But she's the last one they're going to tell. If there's anything going on, she'd be the last one to be informed. So, but they call that the halo effect. So you've got to be really cautious, really careful, and never trust anybody in the stock market, especially with your money at all, that say they can do this and that, right? And the trouble with the market, you can't even trust yourself because you're listening to all this news and everything pouring into you. You can't help it. And your mind is forming an opinion. But it's forming an opinion on not true facts. And that's why it's very difficult to get the market right. So I think we have to close now. And thank you very much for listening.
Mark did ask, would you just comment on this?
Mark wants to comment on the 5 minutes before we go. Right, let's have a look. Okay. Always look at the background here. Well, certainly no demand there. Remember we saw the no demand? Right. One of you observed that, quite rightly. It's gone sideways. This must be, is that no demand? Or it's gone up a narrow spread. Widespread down, look. That's bearish because as Gavin calls that, a gotcha bar. In other words, if you were long here and got trapped in this sudden down move, right, you think, right, okay, I'll wait till there's some sort of rally to get out. But you won't, if the market's weak, you won't have a rally. And there's a 50% retracement. Is it holding? It doesn't look like at the moment. Anyway, I say thank you very much for listening. And look, we'll be doing the newsletter Sunday. And we'll be talking certainly here next Friday at 5:30. So don't believe what you read on the websites.
Okay, thank you. And yes, we will do the newsletter on Sunday and hope to have it uploaded very quickly on that day. We'll see you next week. Thank you. Bye.
Welcome to GoToWebinar, Web Events Made Easy.